I was reading an article which I brought into the studio this evening. It's entitled, "Don't Neglect the Islamic Market." Some of the stats out of this were absolutely fascinating. People like Nestle, for example, have been manufacturing many of its brands using halal processes and securing halal accreditation to fast-track its growth in Muslim markets. In 2008, Nestle achieved $5.2 billion US revenue in halal products. That's just one example. And it got me thinking about the Islamic market and money within the Islamic market. So that's why we've invited Yusuf Moola, who is the Senior Sharia Portfolio Manager at Sanlam Private Investments, and Mufti Ahmed Suliman, who's the Chairman of Sanlam Private Investments Sharia Board, into the studio. Good evening, gentlemen. Nice to have you with us. Now, Ahmed, you are more on the Sharia law side of it.
Yes.
Give us a bit of background here to morons like me who know very little about Islam.
Sharia law comes from the Quran and the Sunnah. Just to give you a quick background, the Quran refers to the holy book of the sacred book of Islam. Okay. Muslims refer to this book. It has injunctions what Muslims could do, what they cannot do. So one of the major injunctions of the Quran with regards to money and with regards to investments is the prohibition of interest. And Muslims do not invest in or should not be investing in avenues that earn interest, or Muslims should not be paying interest as well. Then the other source of Islamic law refers to the Sunnah. The Holy Prophet Muhammad, may peace be upon him, was sent to explain the Quran, to explain to us the teachings of Islam. Mm-hmm. So many of his traditions speak about money and investments and how Muslims should be investing their monies. And from there again we will find that interest being the major factor that is not permissible in Islamic law.
Okay, now then how did this whole tie up come together with you? Because you started this about just over a year ago. Eh?
Yeah, basically I've been a stockbroker for 16 odd years now, and managing money for high net worth individuals and in different forms for over that period. And I joined Sanlam Private Investments like 14 months ago with a primary function to set up a Sharia compliant portfolio, bespoke equity portfolio, and investment advice. And my first job, or first part of the job, was to obviously get a Sharia supervisory board in place, and of which Mufti Ahmed is the chairman, and we've got two other members, Mufti Zubair Bayat, who sits in Durban, and Sheikh Toha Karan from Cape Town. We try to be representative of the whole Muslim population in South Africa. The three major centers, Johannesburg, where Mufti Ahmed is from, and then we got Durban and Cape Town. So we're trying to be representative of the whole Muslim population in the country. And what happened next was they certified me roughly in October last year that I'm Sharia compliant. Mm-hmm. The certificate's available via the internet, or you can have a look at the original copy at our office. And subsequently I was given a universe of shares that are Sharia compliant. Just to touch on some numbers of the ALSI 40, which most people are familiar with, the top 40 JSE listed shares, roughly 22 are compliant. So okay. The other 18 would be non-halal
something
sources.
Like South African breweries or something.
Yeah,
like
the gamblers, the breweries, the
the
straightforward stuff, the banks, the insurers, and then obviously the grey areas, or not quite the grey areas. One of our formulas is non-permissible income. So if the company earns interest or they sell non-halal meat, it must be less than 5% of the income.
How did Muslim people invest their money before these sort of instruments were brought onto the market?
Well, if you look at the Muslim market, you will find there's always been constraints, especially in countries like South Africa, where we are a minority Muslim population. There's always been constraints, and Muslims were always left out from the mainstream market solely for the pure reason that I mentioned earlier on, that the market is based on interest. So, bring your money in a bank. Muslims would definitely use the banking system, but will not benefit from the interest components or interest earnings from there. For example, a Muslim businessman might have excess cash which he would deposit in a bank because obviously you need the bank to do your business.
Yeah.
You need it for security and safety, etc., etc. But then there would be an interest component, and Muslims would earn interest from there, which would then be donated to charity, to the poor and to the needy. Muslims would not then benefit from that gain personally.
It must have been, I mean, until such time as you had banking institutions which were looking at the Muslim population and the Sharia law, it must have been a very difficult time to work through, you know, from a personal point of view.
Yes, it was difficult. If you look at it from a pure investment point of view, your bank was not even regarded as an investment option. It was just, you know, there for safekeeping.
To do your business.
To do your business, to facilitate your transactions, you know, buying and selling, etc. But it was not an investment option. Muslims would invest maybe in property, you know, buying fixed property and earning some rental income from there.
Because you can, and I'm correct in saying this, whereas you can't earn interest. You can earn rental income and you can make profits.
Yes. Maybe I should just go into you know, understanding what is interest and what is the difference between Islamic banking and conventional banking as we know it.
Okay.
Conventional banking is very, very simple. You go, you deposit your money into the bank, you earn a percentage of capital as interest. So interest in Islamic law refers to any amount, any excess amount over and above the money that you have given as a loan. So normally when you deposit money in a bank, it is a loan. So any excess from there, whether it's 1% or 10%, or the percentage is not the issue here. The issue is any excess earned over the loan that you have forwarded to the institution is regarded as interest and impermissible.
Would I be correct in saying that this probably goes back to way back when it was within your community, the feeling was you should make loans to people who need the money and you shouldn't get anything out of it?
Yes, there's a pure distinction between giving a loan, which is you know, a favor upon the person who receives the loan, the recipient of that loan, to fulfill his needs and requirements from that loan. And there's a difference between a business venture. So Islamic law, when we talk of Islamic banking is business. It is not giving of loans. So when you deposit your funds in an Islamic bank, the Islamic bank pulls all that funds together, and the Islamic bank will do business. It will buy and sell. For example, it will buy motor vehicles and maybe lease the motor vehicles out. It will maybe buy equities, permissible equities from the exchange and sell that. It will do the various forms of businesses. And then the profits earned from that will then be pooled together and shared between the bank and the investors, the depositors. So it is not a fixed return on capital. You will not know your percentage of
you can't go in and they'll say, yes, we'll give you a 5.25% return.
But you know your profit sharing ratio, which would be maybe 50-50 or 70-30 or whatever.
Okay.
So the bank will take maybe 50 and the client takes 50, etc.
An important issue here is that you must remember, in a Western situation, when you put money on call or fixed deposit or whatever, you guaranteed X amount of interest. Whereas on the Islamic side, because you are a participant in risk, you could actually lose money.
Yeah. Okay.
So you're actually taking risk.
Yusuf, what is this market worth?
The market's quite big. You know, you're looking at approximately 2% of the population in South Africa are Muslim, but more than 50% in Africa are Muslim. And then obviously the petrodollars is another equation on its own. There's about 200,000 households in South Africa of the Islamic faith, and which is growing at a massive rate, because there's been immigrants coming from India and Pakistan of the Islamic faith as well. And you know, at the moment, up to recently, before the bespoke equity that we launched, there were 5 equity unit trusts that were available in the market. And you know, they represent easily 3 billion rand, or between 2 and 3 billion rand. You know, if you actually look at the last 17, 18 years since independence or Mandela being released, the Muslims have you know, benefited a lot in BE, because you know, we were educated in the past. And we got fairly decent positions coming out of that would be, so there's a, it's a growing market, number one. Number two, there's a lot of high net worth individuals. So there's a lot of money that's available out there. At the moment, bulk of the money is going into physical properties. And guys, you asked a very good question a few minutes ago where you said it was very difficult before we had all these products. If you speak to the old gentlemen that are 80, 85 years old, and you sit with them, being a stockbroker, I know a lot of them, and they'll sit with you and tell you, I can buy ACI because they're in chemicals. I'll buy Cecil because they're in petrol and it's compliant. And when you start talking of Pick n Pay, they tell you, no, when you walk down the Pick n Pay aisle, they're selling alcohol there and they're selling pork. So they use their own judgment in so-called invested in a Sharia compliant way. Number one. Number two, they always had a problem with purification. So many of them were not, couldn't digress a balance sheet or dissect a balance sheet as well as some of the current professionals can do today, where they, on an ad hoc basis, they would say, okay, I bought AECI at X and I sold it at X. I'm taking 10% of the profit and giving it away to charity to purify it. Now we do it on a proper basis. So we work out exactly what the interest component was or the non-permissible amount was, strip it through the dividend and pay to charity.
Okay, now a lot of people will probably be saying this is very niche, but it's not actually that niche, because what we're going to get into in a moment is that this particular market and type of investment is open to anyone. It's not just here for the Muslim market. Yusuf Moola and Mufti Ahmed Suliman from Sanlam Private Investments, our guests this evening on Mansfield's Money Minute. We'll be back in just a moment.